Assalamu alaikum, Dr. Sawwaf. Thank you so much for agreeing to come on my show, the Nabil Show. I'm very excited to have you here, and inshallah, I can't wait to get into it. Thank you so much.
Wa alaikum assalam wa rahmatullahi wa barakatuh, and happy to be here. And thank you for the invitation.
MashaAllah, mashallah. So, before we we'll get right into it, inshallah. So, I know who you are. Many of us know who you are, and mashallah, very well known in the Canadian community. But for those who might not know who you are, inshallah, if you can please introduce yourself.
Absolutely. My name is Mohammed Sawwaf. I'm founder and CEO of MANZIL. For those that don't know MANZIL, we are an Islamic financial institution, fully digitalized. So we like to call ourselves like a neo bank or a digital Islamic financial institution. And we manufacture, so we create and distribute halal mortgages, investment solutions, wills, so the whole gamut, and inshallah, going to continue on that path of creating products and being able to fulfill the gap in the Canadian banking industry.
That sounds awesome. So if you can share with us maybe how you started MANZIL, what was your vision, what was your motivation, what kind of got you into that, and what led to the creation of MANZIL, inshallah.
Absolutely. So I always take it back to when I graduated in undergrad. It was 2007. I got into finance, even though that wasn't my formal education. It was more pre-med, so life sciences. And in banking, it was very retail based. So, we were, our products were mortgages and insurance and investment funds, bank accounts, loans, all that kind of stuff. And I tried, to tap into our community with respect to, attracting them to our program, our products, our services, and obviously me being the relationship advisor, giving them the proper advice, making sure that they were doing the right thing. But it was very difficult to tap into it because, again, the products weren't compliant, Sharia compliant or halal. And I didn't know what that meant at the time. Like, I understood the concept of riba or usury, but I didn't understand kind of beyond that. And of course, the world of Islamic finance is much more than just ribawi based. So fast forward to kind of 2007, from 2007 to 2014, I kind of just went on my own path. And then I actually decided to go back to school on a part-time basis. And I went and studied at the Rotman School of Business from U of T. And I met with a professor there who was teaching the only Islamic finance course at the time. And I had expressed my interest. I said, this is something that the community's been talking about. I've done my research, really didn't find anything. I've talked to many executives in the field. They didn't want to do it. They didn't think the opportunity was big enough, and they didn't have the experience or the academic background to understand how to structure these products. So I said, could I take your course? And he said, well, you're in the executive MBA stream. This is more for part-time and full-time. But he's like, I am looking for a TA, so why don't you become my TA? And alhamdulillah, we taught that course for over 5-6 years, right?
Oh, wow. So it was popular.
It was very popular. It was sold out every year.
Wow.
And the whole point of that is, for my purposes, was better understanding, can Sharia compliant financial products actually work within the current Canadian regulatory, legal, and tax system? That was the most important piece, because I didn't have any wherewithal of changing law, or how do you advocate to change law, lobby to change law. And we can talk about that later. So I said, I want a system, that is there, and can we, can it accommodate Sharia compliant structures? And the answer was yes. That master's then led into a second master's in corporate governance and finance under his supervision. And then, of course, into my doctorate in Islamic finance, finally. So there was like 10 years of study on a part-time basis that kind of completed all 3 of those degrees, alhamdulillah. But in the meantime, I moved from one institution to another. I got into a fintech, and then kind of that's where all my worlds collide to say, I want to build something like this fintech, but for Muslim Canadians.
Makes sense.
And it didn't require a lot of capital. Because that was the big thing for me, is like, how do you even introduce Islamic banking as an Islamic bank, right? First and foremost. And that's a lot of time, a lot of money. There's variability. There's no guarantee that you're actually going to get approved. Mm-hmm. So I had to start from somewhere. So in 2017, I kind of left corporate, startup world, and I went on my own, and I said, okay, alhamdulillah, I have the knowledge, I have the professional background. Let's see how far we can take this. And so we were in R&D phase for about 3 years, from 2017 to 2020. And then we came into the market launching our Murabaha mortgage product, backed by the MANZIL mortgage fund, which was kind of the vehicle to provide the capital for the mortgages, and alhamdulillah. And then from there, of course, we grew into other products, and obviously taking into account what Muslims within our communities are looking for as a priority of service or products. And here we are today.
MashaAllah, that sounds amazing. I know it's a tough journey of entrepreneurship, starting a company, and especially leaving what you were doing before, and taking on that challenge. So that's amazing. So what were some of your challenges once you started MANZIL? I know that, for example, there was the financial crash that happened some time back, and there was a lot of distaste that was left in a lot of people's mouths and about what happened, and they weren't able to really trust any new Islamic finance when they came out. They don't know if they're going to fizzle out, money's going to disappear, anything like that. So can you say anything about that?
Oh, absolutely. So there was definitely a stigma that lingered since kind of the debacle. And even when we were having conversations with regulators, we were having conversations with executives at banks, they all knew about it, right? Like everyone, and if they didn't say anything, they knew about it, but the elephant was in the room, and we would bring it up. And so our focus was always, about maintaining professionalism. Of course, considering my background in investments, my background within the industry, understanding compliance, fiduciary duty, regulation, and maintaining not only the utmost professionalism, but also over-investing in the regulations, the compliance of the company, the governance of the company. And, I looked at it as twofold, right? We're creating the space, but we're also having to clean up the space at the same time and show the community that has been, that has created distrust, right? Through some bad players, that there is a path forward and there is a way to make this work. Even when we first launched and we were starting to do seminars, within the community, they were always asking that question: what makes you not the next Financial? What makes you, better than the rest? How can you guarantee your survival, your stability? And you know what? The only answer to that is time will tell.
Of course.
That's it, right? So the longer we're in market, and alhamdulillah, we've seen, and that's why we've had really, really explosive growth. The longer we're in market, because people start to recognize the brand, they start to recognize the name. They understand that if we're still in market, that means we're growing, we're progressing. They hear it from more and more people, right? So around them, some people may say, I hold an account with MANZIL, or I got a mortgage from MANZIL, or my will is with MANZIL. These are all validations, third-party validations to say, more and more people are trusting MANZIL. Maybe I should too.
Yeah, that makes sense. Yeah, I mean, so Financial has become almost like a case study in kind of what can happen, and how they were being funded by a credit union, and how that plug got pulled on them, and what that led to. That was kind of, I guess, the starting of that story and how that completely unraveled. But I guess that moves on to the next question of, what were the challenges for you in raising funds for MANZIL? Like, was that just private investors? Was it some institutional backers? Kind of, what did that look like, or whatever you can share with us?
Yeah, no, absolutely. So in our R&D phase, obviously we had very, very heavy legal bills, licensings, a lot of things, right? And we were a small team, but the setup was really, really important. That's the foundational piece. And so we acted like a startup. So we raised capital from the perspective of startup, and we sold equity along the way, right? So, to date, we've done 3 rounds of capital raises, all equity based, so priced rounds, and totaling about $4.5 million, right? So that's the investment that investors have entrusted us with.
Yeah.
Obviously, this is an amana for us. We want to consider ourselves good custodians of that investment, because we've built a business out of it that is now revenue generating, and I would look at us as the premier, right, Islamic financial institution in Canada now.
Yeah.
So that was kind of the first challenge, and I make it sound easy.
Of course,
that's dozens, if not hundreds, of conversations, hundreds of presentations, hundreds of going on stage and pitching until you kind of get that 1 or 2 yeses, right? Yeah, for every 99 no's, you'll get 1 yes, and My luck is always I get the 99 no's first before I get the yes. So alhamdulillah, Allah tested us and He made it happen. The most important raise, I think, was how are we actually going to fund these mortgages?
Yeah.
Right. And, again, conversations with financial institutions, let alone like put aside, how if they even were to say yes, could we even create a contract that was Sharia compliant for them to fund? Right. We didn't even get there. Right. It's just, this is unique. This is different. We don't understand the risk. Obviously Financial, what makes you, better than them? What have you done? Basically, it was a prove us wrong first mentality.
Yeah.
Go out there, figure it out, then come back, and then maybe, right? So the other problem that we solved for as part of kind of this program, this solution, was the lack of access or the lack of availability within the Muslim community to invest in, income-based or fixed income-based products. Mm-hmm. Most of the time, like if any Muslim is an investor, they're usually and they maintain and want to maintain a Sharia compliance within that investment. They're investing in equities, right? Yeah. Which is very risky. You're taking the risk of the market. And especially if you don't have a long time horizon, it may not be the right solution for you. And so what happens is our community has a lot of cash, right? And not cash in the sense that it's at home, but cash in a checkings account, right? Yep. Cash in a savings account where they've asked for no interest. And if they get the interest, then they purify it by donating, that interest to charity. Cash even in their investment accounts, like an RSP or an RESP or a TFSA, because one, they didn't know how to invest it. Two, they thought that the only way to maintain Sharia compliance is to keep it in cash.
Yeah.
So, for somebody that's, and so then when you think about the community itself, we're not an investor savvy community. Like we have to go back to basics. We're a saver community, right? Which is great. But then even when you switch from saving to investing, there's levels of that and there's levels of risk. And so you want to start with the low risk first. And so we said, well, why don't we come up with a mortgage fund that is backed by these Sharia compliant mortgage transactions, murabaha and musharaka. They participate in the fund. We take that capital, we finance it using murabaha and musharaka structures. The client is obviously going to pay a profit rate in return. And then we share that profit rate with our investors.
Yeah.
And this isn't a new concept. Like when I was an advisor, we were selling mortgage funds all the time.
Yeah.
They were low risk, right? They were asset backed, interest based, of course. But the concept of participating in something like this that was low risk with, above average return was already there. And there was legal precedence around creating a mortgage fund that allowed us to attract retail investment.
Yeah.
Back to the institutions. So we started doing deals. We looked at it as like a pilot project, right? And as we got more money into the fund, we started to do more deals, and that became our track record. We then start to go back to them and say, hey, we've now been doing this for a couple of years. We have, right, attraction from the community to not only invest, but also use the product. They're paying a premium because the investors want a premium. Would you be willing to participate in this, but on a larger scale? And we got one yes, right? Alhamdulillah. So we do have one institutional investor that supports the fund on an investment basis.
Okay.
Alongside with the retail investors in the mortgage fund. And this is allowed to actually scale and grow our operations and do more deals, right? So, when we look at last year, alhamdulillah, we did about 50 mortgages, just under 50 mortgages for about $25 million, right? This year, inshallah, we plan on doubling that, right? And now we have the systems in place, the operations in place, the compliance, the licensing, the regulatory framework, the internal ops. All of these things have been built over the last 5 years so that we can not only instill confidence and create trust within our clientele, but grow a model that is sustainable and legacy building. Because I'm not going to be here for a long time, right? I want MANZIL to continually survive even after, Allah subhanahu wa ta'ala takes me away from this dunya.
That's very noble for sure, and I know that's a challenge. Is that an ongoing effort for you to raise capital? I know this is something actually a lot of people ask, and even in internal discussions amongst friends and family and community members, it's like, where are they getting money from? How do they get, how they, there was a time I think I had heard as well that there was like a waiting list, and that kind of meant that there was funds that were tight, and people had to wait. And then, so, how does that, is that an ongoing effort of raising funds? Are you raising, in Canada, or are you just going all over the world for any investor?
So my number one priority as CEO is continually raising capital, right, for the fund, whether it be through retail or through institutions. The institution piece is definitely, I would say, a global discussion. That's why I'm in Dubai a lot. That's why I'm in Riyadh. I'm in the US a lot, talking to institutions and trying to get them to participate. We're talking like minimum $100 million ticket sizes, right, at this point, right, in terms of, the ability to scale. Why? Because even though we started off with a wait list, we're obviously, the wait list is open in the sense that we've taken people off the wait list and into homes.
Yeah.
But that wait list still grows, right? Like MANZIL today, we have, alhamdulillah, about 20,000 families still on a wait list.
Wow.
That requires about $10 billion of capital.
Wow.
And it grows at $100 million a month with no marketing.
That's amazing.
So how do I fulfill that?
Yeah.
Right? And the easiest way, right? Like everyone that talks to you about where are they getting their money or how can they get more money, instead they should be saying, how can we help?
That's right.
Because there's 2 million Muslims in Canada, right? And not all of them are over 18, but let's say 50%, right? 50% are over the age of 18, 50% are less. And, I've always had this initial kind of concept or goal of why can't we get 10,000 Muslims across Canada and invest $10,000? And I'm not even talking about money out of their pocket. I'm talking about you have money already invested at the banks. They're not going to provide halal financial services for you. It's most likely sitting in cash. So why aren't you investing it in the MANZIL mortgage fund at a very reasonable return, right? It's monthly, it's liquid, and we can talk about the mechanics even if you want. And it supports your brothers and sisters into home ownership, right? You can shift them from rent to home ownership.
For sure.
And 10,000 for 10,000 gets you what? $100 million.
Yeah.
Right? That's the starting point, right? Like in the mortgage industry, in the mortgage business, if you don't have a $100 million fund, nobody talks to you. Mm-hmm. Why? Because that 100 million sends a signal to the market. It sends a signal to the market that they're well established, that there's enough demand, and potentially, right, there's a long enough and a strong enough track record that enables additional business, especially from the institutional grade level, right? We're talking pension funds, we're talking banks, we're talking family offices. And this is where we need to, and by the way, Brother Nabil, our average account size is double that, right? Mm-hmm. So we're not even talking about give us $20,000. Sure, that's fine. That means we only need 5,000 Muslims, right? Or we find 1,000 Muslims for $100,000 accounts.
That's true.
Right? The math is very easy. What's 10,000 Muslims out of 2 million? 0.5%? Right? We know they're out there. We've done the study. There's $20 billion of Muslim wealth in Canada. And it's not with MANZIL. It's with the banks. And what are the banks doing? They're taking that money and they're using it into a ribawi-based system. So even though you're earning zero return, your money is enabling the riba system. Right?
That's right.
And I'm sure maybe your brother had discussed that.
Yeah.
In terms of how deposits, fractional banking works,
yep.
all of that stuff, right? And we're very familiar with that.
That was actually going to be one of the questions, was the whole fractional reserve system in kind of all banks around the world.
Yep.
So if MANZIL or another Islamic mortgage institution gets institutional support and they kind of use a fractional reserve system, mm-hmm. how does that affect Sharia compliancy, or does that affect Sharia compliancy?
It doesn't affect Sharia compliance at all, as long as the agreement between us and them is a Sharia compliant one, right? Even amongst the scholars, the source of that capital isn't really an issue, right? So, for example, let's say we got a client, a retail client, some Muslim that invested in the MANZIL mortgage fund. We don't know where he got that money from in terms of how he earned it, right? It could be in halal means or it could be in haram means. But forget about that. What if he deposited those funds and those funds came from a line of credit?
That's true.
Right? The line of credit that he took the money from is a contract between him and the bank, right? If he takes money out of his line of credit, he has to pay the bank a certain percentage rate, 7%, 8%, and he'll pay that, right? So if he deposits $10,000 in MANZIL, the cost to him is more than $10,000 because he borrowed it from somebody else. But when he deposits it through MANZIL, like the contract between us and him is completely Sharia compliant because all he gave us was $10,000 as an investment into the MANZIL mortgage fund to be used for murabaha and musharaka mortgage financing. And we have an agreement that we will share that profit with him. Khalas.
That's it.
That's it.
Simple as that.
It's as simple as that.
So about musharaka and murabaha, inshallah, if you can kind of just explain to us what are those models? I know that those are the popular models for Islamic mortgages. So there's musharaka and murabaha, and how do they work?
Absolutely. So murabaha or cost plus profit or profit based agreements. Here in Canada, they like to call it like, it's akin to rent to own, right? But I'm like, well, we have a jada for that.
That's right. Yeah.
Yeah. But pure form murabaha, right? It's basically, I like to say, trade based financing. Okay. You are in the market for a home. Inshallah, alhamdulillah. And you want to buy a home. You find the home that you want, right? You're working with a real estate agent. You find a home that you want. And you put an offer and the offer is accepted, okay? That offer of agreement of purchase and sale gets assigned to us as MANZIL. So there has to be an assignment clause, okay, in there. Without the assignment clause, we can't take it over. And if you've done it after the fact, we would just go back to you or your realtor and say, hey, can you introduce this assignment clause? Because as part of MANZIL's financing structure, we need to have the home assigned to us on closing. Fast forward, nothing happens in between. Just fast forward to closing, right? So now we have a bunch of legal work that needs to be done. What happens is MANZIL legally will acquire the home, right? I'm the director and I sign off on every mortgage or home ownership, right? So you'll see my signature on the paperwork saying that MANZIL has taken ownership of this home.
I see.
And then we will, we will resell it back to you. And this would have been pre-agreed upon, right? So if you bought it for $500,000, let's say you put an implicit profit rate of 5% over 25 years, that $500,000 plus 5% over 25 years, $750,000 needs to be paid. Your monthly installments are $2,500 a month for 300 months. Okay, pre-agreed upon. So now I've sold that to you for $750,000. That house is now in your possession. It's in your name. We just have a mortgage charge or lien to ensure that the financing we've provided you is protected. And you go on your merry day making your installments. You have full use of the home. You can rent it out. You can renovate it. It's yours. You're on title.
I see. So is that what happens if somebody wants to sell the house? At some point, does that affect the structure somehow, or does that affect your profit? How does that?
Yeah. So it doesn't affect the structure at all. You can sell it. The profit piece is an important one because you've agreed to commit, right, to the full profit.
Yeah.
Now, contractually, from a Sharia perspective, we can't say that if you get out of the contract early, we'll rebate you, right? Contractually in the contract. Otherwise, it's deemed impermissible or non-Sharia compliant. However, nothing stops you as a consumer to make that request to us, right? So you can say, hey guys, I found a nicer home, a bigger home, I'm moving, right? I need to sell. Will you forgive me the remaining profit, like the future remaining profit? And it's at our discretion. Right?
I see.
We can say yes, we can say no. We can say, you know what, we'll forgive you some, but you have to pay the rest. It depends, right? Depends on our situation. Maybe we need the money, so we can give it to somebody else.
Yeah.
Right?
Yeah. Makes sense.
So maybe you get more favorable terms, right? So that's murabaha. Musharaka which is like 99% of our uptake right now, right?
Yeah.
Everybody uses it because in Murabaha, you can only use it for new home purchases. You can't use it to transfer an existing mortgage or do refinances or takeouts.
That makes sense, yeah.
So with Musharaka, much more flexible product. New purchases, refinances, transfer your mortgage over from a conventional bank over to us, equity takeouts. You can do the whole thing. And you can also do shorter terms from a pricing perspective. In Murabaha, if you want the cheapest payment, you have to go with the longest term, 25 years. And right now, to get a 25-year fixed rate Murabaha mortgage is very expensive.
Yeah.
With a Musharaka, we can go 2 years, 3 years, 4 years, 5. We can do any number we want. But, right now, MANZIL has 2-year mortgage, 3-year mortgage, 4-year, and 5-year, all Musharaka based. Okay? We would basically enter, again, assignment clause is required. Why? Because we have to now partner with you.
That's right. Yeah.
On this home. And so we actually create a formal partnership agreement under the laws of the particular province. We're operating in Ontario and Alberta. So an official partnership agreement, which is akin to like a GP-LP. Mm-hmm. MANZIL acts as the GP and one of the LPs for our financing position. If it's 50-50, 80-20, whatever, right? So we will own 50% of the shares of the partnership. You will own 50% of the shares of the partnership. And every month you're buying our shares.
Yeah.
So your shares will increase and our shares will decrease until it's zero, right? After 25 years or 20 years, whatever the number of years you specify. You're on title, you have complete access to the property, complete use to the property. All of the expenditures are on you. We just hold a mortgage charge. And if you want to sell, you can sell whenever you want. If you want to rent it out, you can rent it out. You want to renovate it, you can do as you please.
This model works better for that. So based on whatever the percentage of partnership there is, then when you sell the house, then both parties will receive that percentage. Is that?
So we actually forgive our position in the profit because you can in Sharia, right? Mm-hmm. So even if we sell for 50% more a year later, you will get the full 50% increase of the property price.
Oh, wow. Okay.
We just want the money that we gave you to finance the property back, the principal. Now, we can't do that when it comes to sharing risk. We can't say, oh, well, we gave you 100% of the profit, now you get 100% of the risk. No, right? The profit is the benefit piece. And so for us, it's as if we're gifting it to you. Whereas on the risk side, if we're 50-50, we need to then share in that risk. Lo samhallah, something happens to the home, right?
Yeah.
And there's extenuating circumstances and a lot of detail that goes into that. So on the profit side, it's a profit forgiveness. You get all of it. But on the risk side, that's not the case.
That's awesome. So I wish more people understood that. A lot of people will say, this is basically, they'll criticize Islamic financing products and mortgages and say, this is basically interest. They're charging the same rate, profit rate, and it's just going through a different, more creative structure or loophole in the Sharia, and they're basically doing the same thing as the bank, but it's more expensive overall. Mm-hmm. Might as well go to the bank. And I've spoken to a lot of people that have said that. I'm like, no, it's not like that. Have you actually read what the structure is, Murabaha, Musharaka? They're like, yeah, but basically you're doing the same thing. Yeah. So what do you say to people like that?
100%, and I want to talk about pricing, why it's more expensive too, right?
Yeah.
But for those that say, we're just changing the words interest to profit, right?
Yeah, exactly.
Or, this is just, as they say, lipstick on a pig, right? It's not, because, I could say the same thing about halal meat, right? Why do we have the halal stamp when it comes to meat or certain types of foods? We know that the process is different, right? We know that animal was slaughtered in a humane way. The blood was drained. There's an imam or a sheikh or somebody that recited, Bismillah ar-Rahman ar-Rahim on the animal before it was cut. And Islamic finance is no different. If we went to a restaurant and we were served halal steak and a non-halal steak, we wouldn't be able to tell which one is which, right? They said, oh, guess which one. I don't know, right? But if they said this is halal and I said why, they'll say, well, the process is different, right? And Islamic finance is no different, right? The process and the documentation is different, even though the outcome is the same, right? And so if we look at an apples to apples comparison of, well, 5% interest here, 5% profit here under musharaka or murabaha, what is the monthly payment? Okay, $2,000 a month here, $2,000 a month there. Okay, what is the end total, cost? It's the same. And then they're going to say, well, what's the difference? They say, well, under murabaha, we have to buy the asset, then we resell it to you. Under musharaka, we partner with you on the asset. And the number one thing, this is where the education comes into play. If you as a Muslim don't understand the concept of riba, which is money on money, right? Then all of this stuff that we're talking about, you're not going to agree with, right? Like all of that goes out the door, because as a financial institution, Islamic financial institution, we don't actually lend any money when you think about it.
That's right.
Right? We are in the business of trading, right? وَحَلَّلَ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى, right? And bay' in Arabic is translated to trade. And so what are we trading? We're trading assets. We're buying assets and reselling them to you, or we're partnering in assets. And so that's the difference. We've never actually given you money and said, give us more money back. And that is essentially the main principle or tenet in a contract between you and the bank, right? And I'll give you another example. If I have a phone store and you come to me and you say, hey, brother, what's the latest phone? I say, okay, iPhone 15. You say, how much is it? I said, it's $1,000 cash. You say, well, I don't have $1,000, right? Today, in this world, you could go to a bank. They'll give you $1,000, right? Which you then would bring to me and pay me. But what happened, you still have a contract between you and the bank that says, I need you to make $100 a month installment for the next 12 months. So what's your cost? Your total payments are $1,200, right? The phone costs $1,000. So now there's $200 there of interest, right? Which is 20%.
Yep.
If you came to me and said, okay, brother, I don't have the cash. Is there another way to do this? I could say, yeah, we could do a murabaha-based agreement, right? I own the asset. I already own the phone. I'll sell it to you for the convenience of installments for $100 a month. What are you paying? $1,200 in total. $200 is now what? Profit. It's not interest. I didn't give you any money. I just gave you a phone and I said, pay me back $100 a month. But it's not going to cost you $1,000. It's going to cost you $1,200.
So the difference would then be, if you pay now, you pay the cheaper price. If you pay later or over a term, then you pay the regular price, or the price with increased profit.
Exactly, right? And it's a convenience fee for being able to pay in installments. But you still get full use of the phone, right? You get the phone today.
So what happens, this is something that maybe affects especially in regular mortgages, conventional mortgages, where somebody can't pay for some period of time. And then so that keeps getting added onto their principal, and then, the banks don't care. They're making more money. You can take longer to pay. Right now, a lot of people I know are in like forever mortgages, or like 40, 50, 80, 90 years.
Yep.
I know some people at work even that are, they're in like forever mortgages. They're only paying back like a tiny sliver every month, and most of it is just interest. And sometimes they can't make sufficient payments to even cover the interest.
Yeah.
But in this kind of, especially in this market where, affordability crisis is a big thing, how would that work if somebody lost their job, or they're not able to pay for some time, or if they came and asked, can I get a month, 2 months, 3 months, 6 months break from mortgage payments? It
is a very good question, because it was brought up yesterday, actually, on another podcast that I had with an MP, because he was arguing, right? Well, what's the difference? It sounds the same, right? In terms of risk, like as a bank. And I said, no. I said, this is exactly the difference, right? Because we saw it in COVID, right? This whole payment relief, okay? So if somebody could say, I can't pay, right? And before COVID, they'd be like, oh, you've defaulted, right? Interest is compounding. It's still accruing daily, even though you can't pay it. And then by the time you sell your home, who knows how long it takes? Maybe there's nothing left in equity that you end up getting because it all went to the bank. Legal fees, admin fees, this fee, that fee, whatever, right? During COVID, they said, you know what? If you want payment relief, we'll give it to you. I said, okay, that's good. Like that's a very Sharia compliant way of doing things. However, the interest still accumulated, right?
Yeah.
But they didn't take your home from you, okay? In Islam, if you can't make a payment, that's when the clock stops.
Interesting.
You can't keep the profit accruing, right? And even when it comes to certain fees that are in place, administrative fees, it has to be based on the cost of your operations, not based on, taking advantage of this person and knowing that, they're going to sell the home, they're going to make lots of money. How much can we take from that profit, right? Like let's say you defaulted on a payment. The bank may say, okay, for every defaulted payment, we're going to charge you $150 plus NSF fees. Okay, I understand the NSF fees because that's a flow through. It comes from the other bank. But why are you charging $150? Does it cost you $150 to administer this, like to send a letter to the client to say you missed a payment? Not really, right? It's what it is a deterrent, right? For us, maybe and not even for us, for them, maybe the true cost is $20, right? So, okay, charge them $20. Now, people argue, well, what if somebody takes advantage of that? They'll just continually miss payments.
Yeah.
Right? That's fine. Charge the $150, but the $130 difference that you tried to make in profit, that has to go to charity. Mm-hmm. So this is how you avoid the moral hazard, right?
I see. Yeah.
Yeah.
Very interesting. So, I guess switching gears a little bit, I know that I believe MANZIL is the first AAOIFI certified Islamic finance institution in Canada.
Mm-hmm.
How does that process look like in terms of their auditing, and is that a continuous process? Are they continuously involved? And how did that look like?
Yeah. So for those that don't know, AAOIFI, which stands for the Accounting and Auditing Organization for Islamic Financial Institutions, this is a governing body, a standard body that is based out of Bahrain, regulated by the Central Bank of Bahrain. And every Islamic bank is either a member of that organization or an associate member. And, sometimes they sit on boards for particular categories, right? Alhamdulillah, MANZIL became the first AAOIFI member out of Canada, okay? And because we wanted to create a standard or adhere to a standard that every other bank was adhering to, which is the gold standard, right? And that was like, even when we started out in Canada, people didn't know what AAOIFI was. We were educating them on AAOIFI and the reason why we kind of went with this standard. They're not a certification body, okay? So they don't come in and audit you, but they do have rules, right, that you have to adhere to. So what are the rules? You have to have a minimum 3-member Sharia board, right, of CSAAs, which is Certified Sharia Auditors and Advisors from AAOIFI, right? So they would have had to have taken the course to become a CSAA, right? So 3, minimum. Then you have to have internal advisors and internal audit, and external advisors and external audit, okay? So this is more of a self-regulating or self-governing practice. They ask us to maintain that in order for us to maintain our status with AAOIFI, right? So every year they ask us, okay, show us, your internal audit, your external audit, your Sharia advisory board to ensure that, those that framework is still in place within our organization so that we can continue to become a member. Okay. And when it comes to the CSAA, so the Certified Sharia Auditor and Advisor, MANZIL has the most, if not all, of the ones that are certified in Canada. So alhamdulillah.
That's
right?
good, mashallah, yeah.
Yeah.
Is that
We're leading the charge on that.
That's awesome. Is that so? Are they continuously, like once a year, once every few months? When do they do their audits? How does that work, their auditing process?
We time it similar to when we do our Canadian audit, right? So,
okay.
Which is now. So we just finished the audit for the fund. And usually by the summertime, the audit certification comes out. We put everything on our website. So if you go to manzil.ca under the menu, like certifications, you'll see the 2022 audit, the 2021 audit. Obviously, like audits are always a year behind, right? So we're now in the 2023 audit, right? And then once that's available, we'll publish that certification on our website, inshallah.
That's awesome. That's awesome. So I wanted to ask you about the current crisis, sort of affordability, especially a lot of young Muslim families, maybe a young couple that just got married and they're both working, or one of them was working, and they want to buy their first home. And now it's become quite difficult with rising just real estate prices in Canada, especially the major cities in Toronto, but even just outside of Toronto, if you even go to London or Ottawa or anywhere else, and it's just become through the roof, a lot of housing prices. So what can young Muslim families do? What are some strategies we can do to get into home ownership? A lot of people start renting, and then that prevents them from getting into a home or saving up for a down payment. It's just this thing that just never happens. So is there some strategies, or is there some recommendations that you have and how that could be tackled?
Yeah, so putting on my financial advisor hat, I used to do this for quite some time. My recommendation was always max out, your RSP to get the home buyer's plan, which is basically an interest-free loan back to you to use towards your down payment or even closing costs. When I was an advisor, that limit within your RSP was $25,000. It's been moved to $35,000, and now with the new budget, they're pushing it to $60,000. So imagine now per couple. You can access $60,000 each, or about $120,000, as a tax-free loan to yourself to be able to be used towards your first-time purchase through closing costs or down payment, which is much more significant. Like back in the day, $25,000 was nothing, right? Especially with the growth of the housing market. And the good thing is you can build up your RSP while still getting the tax deduction. Right? And you can do that on the MANZIL Invest platform. Like we have the ability to open up RSP accounts. You can invest in a Sharia compliant way. You'll get your tax receipt that it's tax season now. So everyone's got their tax receipt while applying for their taxes. And then you can, apply for the home buyer's plan, once you get financing through us, right? So, we are very aware of, new homeowners, first-time homeowner situations. We like to provide them the service, the advice, the education around kind of, some of these paths that are available to them, as Canadians. And we're willing to work with them, right? We're going to be introducing, inshallah, like a more of a formal financial planning service out of MANZIL soon, with certified financial planners, that have been doing this for decades, right? And have the ability to use MANZIL products to service and to fulfill kind of their clients' halal financial needs.
So effectively, somebody could have a tax-free saving account, and they're doing it through MANZIL, and then once that's grown to a certain amount, then they can also use MANZIL for applying that down payment and then obtaining a mortgage.
Absolutely. Like our vision here is that we would take care of every Muslim Canadian from cradle to grave, right? From birth to death. And the birth piece starts with the parents with an RESP, right? Registered Education Savings Plan. But, once they start to go to university, inshallah, by then, we'll have halal credit cards and halal bank accounts. And, if they want to buy their first car, they can get halal car financing through us. Because usually the home comes later. It's a big purchase.
It is, yep.
The saving of the down payment is the biggest struggle. But they can create those goals, right, through the MANZIL Invest platform. They can grow their money in a halal way along the way. And then when they're ready to get financing from us, they can. And as they grow, that asset and other assets, into retirement, then they'll start to think about estate planning services, which is where MANZIL Wills comes into place, and our powers of attorneys for health and wealth. And these are all Sharia compliant and compliant under the laws of the appropriate province, right? So this is really our vision and how we want to take care of the Muslim community from now into forever.
That's awesome. So for a young Muslim family, how would you structure for them to get into their first home? Is there any recommendation in terms of moving out to smaller towns, getting a first place that's smaller and more affordable? I know if you're several hours out in this province or other provinces, in smaller cities like Saskatoon or wherever else, even in Alberta, Edmonton and Calgary, the housing prices are much lower than here. Is there a first step, go to that, and then build your way back into the city? Is that some strategy that could be followed, or that's not? Just stay here and try to get it done here.
So we've actually already seen that with some of our clients, right? Like as soon as they got their pre-approval from us in terms of how much money they could make, they started to look at other markets, right? So we've had people move from Toronto to Windsor, Toronto to Ottawa, Toronto to Sault Ste. Marie, just due to affordability. Yeah. Now, but when you think about who are these people have very, very flexible work from home schedules, right?
Yes.
So it doesn't matter which company they work for. It doesn't matter where they work in terms of the company that they were with, right? The company had flexibility of a work from home strategy. So if you have that, then absolutely this could be a dream come true a lot sooner than later. Alberta is a great case. Our mortgage program operates in Ontario and Alberta. And we started Alberta last year. So it's been a year now that we've launched in Alberta. Our book has shifted from 100% Ontario to now 80% Ontario. So like in 1 year's time, we've now increased, we went from 0 to 20% in terms of our asset base or our financing base into Alberta. Smaller deals, much more affordable, higher incomes too, out of Calgary, right? And it's a very, very strong Muslim community, right? Like Calgary alone has over 100,000 Muslims. Like it's quite significant. Outside of Quebec, Alberta is the next largest Muslim population province wide or Canada wide.
That's amazing, actually. That's quite amazing. In Alberta, is it people moving from Ontario that's growing that? Or
we've seen that. We've seen both, right? People residing in Alberta wanting to transfer over to us or buy new. And we've seen people move out of Ontario to Calgary, not only to get a better job, but also for the affordability.
Makes sense. So now for them to get into the house, what are the factors in terms of down payment percentages? On average, is 20% down, or is it usually a little bit higher that MANZIL will require just because you're not locking in 80% of capital into one person and you want to spread that out more? And looking at what I've actually heard was there was a time where I think 50% was required, and trying to. That's what I had heard, to spread the capital with more clients. Or is it a little bit different now? And kind of what are the income requirements and stuff like that? Is there a multiplier or something that is used as a determining factor?
Absolutely. So our program has always, like from day one, was a minimum 20% down payment program. Okay. Now, just because we say minimum 20% doesn't mean that that's what's been happening, right? Because if you actually look at our book of business, our average finance to value ratio, meaning like what is our financing position of the value of the home, it's around 55%. So when you think about, well, what is the average down payment? It's about 45%. And there's a reason for that, right? If we have a limited amount of capital, let's say we have $10 million, right? Especially in Toronto, that could be like 10 homes, sometimes 5 homes, right? So our thought process is, well, how do we spread this money as much as possible and get more Muslims into homes, right? Why don't we do 20 homes, right? So let's have a financing position of 500,000 in 20 homes, right? So then we look at our wait list and we say, okay, well, who's put in a down payment of 50% as part of their application? And those are the ones that get called and they get prioritized. Even we prioritize people that have invested in the MANZIL Mortgage Fund, right? Because they're supporting us, they're supporting the community, right? And so why not, right? Like we don't want just takers at the end of the day. We want a reciprocated effort here. We want to benefit you. We want you to benefit. Why is the bank benefiting from your investment dollars? And you want to benefit only from our financing dollars, right? We can do both as well. So why not, support both sides? When it comes to underwriting, or how do you qualify, right? So let's say the 20% is the minimum. So you got that. That's a check mark. How much can you qualify for now, right? Mm-hmm. And we institute the same underwriting guidelines that any bank does, right? So we're not OSFI regulated, meaning we're not a Schedule 1 bank. We're not a deposit-taking institution. However, we do adhere to OSFI B20 underwriting guidelines, as well as the CMHC stress test and income ratios guidelines. I don't want to go through all the details. You had mentioned multiplier, which is an easy way, right, to think about it now. We basically tell households or individuals that for every $100,000 of income that you have, gross, right, not net, gross, you have the ability to get up to $350,000 in financing from us.
Okay.
And that multiplier is very similar to the banks, right? Mm-hmm. If you want to compare that to pre-COVID times, right, or when interest rates were a lot lower and before kind of all these interest rate hikes, that multiplier was, instead of 350, like for every 100, 350, it was 550.
Wow. Okay.
Big difference.
Yeah.
Right. So inshallah, as we start to move into a decreasing rate environment, that should also be reflective in MANZIL's pricing, and of course, enable more and more people to get a larger amount based on their income.
So, do you see any indication of that? I know the Bank of Canada has held rates, and nobody really knows what's going to happen. Some people thought it's going to start happening sooner, by spring. Some people are like, it's going to be into 2026, 2027 before we see any kind of drops. And inflation is really still quite high. And we still, yada, 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 we still got to, they need to do quantitative tightening for a lot longer to pull back on inflation.
Very good question. And, up until, let's say, the end of January, there were indications that potentially like as early as May, right? We're going to start to drop rates, and then, there'll be a number of rate cuts by the end of this year, and maybe instead of BOC rate, which is at 5.25, maybe we're down to like 3.5 or 4%, right? Now, because again, I follow the data, right? Yes, inflation is under 3, but it creeped up last month a little bit. Unemployment is starting to increase. Even though we're still net positive on the number of people getting jobs. But what's happening is the denominator is increasing because there's more people coming in from an immigration perspective.
Yeah.
So that's a flawed number, right? Yeah. I wouldn't say unemployment's actually increasing.
I think it's a lot of underemployment as well.
There is underemployment as well. And then you start to look at the relationship between Canada and the U.S., right? Like the U.S. is at 5.5%, and we're at 5.25%. And this difference plays into the currency. Yes. Okay, Canada's currency is going down, meaning it's weakening against the U.S. dollar because our economy is weaker than theirs. Like they're still on fire. And I look at it as well. The U.S. has one rate cut before we have to actually start thinking, because we have to be in tandem. So they can go down to 5.25 while we stay steady. And that won't be an issue. But if they start to cut before us, or if we start to cut before them, there becomes an issue, right? Because we have this new, I still call it NAFTA. I don't even know what the new free trade agreement is called. But the trade agreement from a currency perspective really affects, right, the flow of goods, obviously tax revenues, all of these other things that are applicable to it. And so I think that rates will be held up until the end of this year. And I think that moving into 2025, there has to be serious consideration with respect to a potential rate cut, even if you just do one, right? Because, the whole time they thought that the increase of rates is going to decrease the cost of housing, when it hasn't.
It didn't.
Very marginally, right? In fact, it's fueled other markets, the smaller markets, right? Like, so those markets have increased. Yeah, Toronto, Vancouver, maybe Montreal. We've seen like drops from peak, but it's still very expensive, right? And it's not like anybody can still get into the market, like 20% down payment, okay, now your affordability has gone down by 30, 40%, right? That every dollar is 550 down to 350. Housing hasn't dropped 40% to accommodate the difference, right? That's what they, and even now the Bank of Canada governor has come out and said, don't expect interest rates to change kind of the housing market crisis or affordability crisis, right? Although when you strip out, right, when you strip out gas prices, when you strip out servicing of loans out of inflation, our inflation rate is at 2 or even below. Like they're saying there's 1% of that inflation rate is due to the fact that interest rates have gone up and people are paying more on their loans and paying more on their mortgages. So it's kind of like this vicious cycle, or a circular reference, as I like to call it. And they're aware of that, right? So I don't think they're going to go up. I just think that now that we're here, we'll probably be here for a while. And so those that are thinking in the short term about buying a home and can't afford Toronto, strongly consider, what your employment position is and whether there's a market there for you to at least get in. Because I do tell people you just have to get in, right? At whatever size. It doesn't matter if it's small. Just get in, build that equity, get used to home ownership, and then you can upgrade from there.
Makes sense. So are we looking at just a 25 basis points cut? Or is there some larger cuts that'll come? Or is it going to be that we're not going to get to the rates that we had just 2 years ago, 2020, 2021, where it was sitting at such a low amount and inflation or house prices were able to explode to a massive peak? I actually owned a home here in Stouffville as well, which I sold just 2 years later because it had gone up so much just in 2 years' time. And a lot of people had did that as well. But, or are we going to come down a little bit and just going to stabilize for a much longer period of time to just keep housing prices stable? Because if things go back to how they were, I can see house prices hitting like $2 million here. It's just because they've already crossed boundaries, which a lot of people thought were not possible, and it just kept racing for that.
Yeah, I don't think we're going back to 2021 interest rates ever, actually. I think long term, when you think about mortgage rates or even like the Bank of Canada rate, we're probably sitting at maybe 1 to 2%. And then the bank always puts a 2% premium on that.
Yeah.
So long term, maybe we're in the 3.5% to 4.5% mortgage cost range.
Yeah.
Long term. The U.S. Early on this year has indicated 3 rate cuts of at least 0.25. So let's just be conservative, 0.75. And they've actually still stand by that based on the Fed's notes, like every time they come out and make an announcement. So I'm expecting that, right? I'm expecting that and I don't expect it to happen like in the first half of this year. I think it'll all come at the second half of this year. Mm-hmm. So knowing that they're going to go down 75 basis points, right? At 25 basis points 3 times, we're going to have to move, right? Like they can't be at 4.75 and we're at 5.25. Now, do we move in lockstep? Or what I'm also seeing is, because we raised rates faster than any other G7 country. Everyone else kind of followed suit later. And that usually doesn't happen. Like everybody usually raises rates at the same time within a small period. And because, they agree to this, especially G7 countries. I think what's going to happen is we will start to wait for that data before we make the move, because the last thing we need is to move into a deflationary environment.
So just wait and see approach.
Yeah. And the data is going to inform that decision, right? It may be, and based on that data, there's 2 outcomes. Either we have to move really, really quickly because other people are moving really quickly, and then we're starting to see, deflation happen rapidly, or we move a little bit slower because the data is moving slower as well.
Makes sense. So would it be wise for people to kind of wait until towards the end of the year and see what happens before maybe getting into looking at home ownership? Just wait, especially people who haven't entered the market yet, or they're renting or whatever it is, and kind of just wait and see what happens if the rates drop, then get in and try to get in at better rates. So
in principle, you can think of it like that way. But what we've seen is that any indication of a rate cut, house prices are going to explode. And there was sentiment last month around this in March, right? Like there was even just talk in the media around a potential rate cut. And we're still seeing it because MANZIL has a realty services program. Like we have real estate agents that are trying to do deals for our clients, and they're saying we're in bidding wars still, right?
Yeah.
Now, not at the same prices as 2020, 2021, but still bidding wars. Why? Because there's no supply. So either you wait and the rate drops, but then it's harder for you to get into the market, or get in now and then deal with a potential rate drop on renewal, because they always say you marry the home, right, and you date the rate. That's what
right.
you're doing.
That's
right.
Yeah.
So get into the house that you want long term, and get a short term mortgage, 2 years, 3 years, 4, 5, doesn't matter, and then at that time you can renew, and inshallah it should be lower.
Makes sense. So I guess moving into what the Trudeau government has announced, and they're looking into the whole aspect of Islamic banks or Islamic mortgage products, and they're kind of open to the idea. And there's a little, as you said, there's a lot of discussions that are happening behind the scenes, a lot of positive as well as negative.
Mm-hmm.
What do you see that doing to the market, maybe in terms of MANZIL and also overall in the Islamic mortgage market in the next few years?
Yeah, absolutely. I think the explicitness within the budget around halal mortgages, right, and looking at equalizing the tax law or tax code around that is welcome news. Number one, right? I think it sends a signal to the market, especially large institutions that we've been in discussions with, that there's potential support around this, right? Because we've been in discussions where the product has been there's been due diligence on the product, risk, compliance, legal, no problem issue, and then they say, well, where does the government stand on this, right? And for them, it's all about moving those dollars from their balance sheet, off balance sheet, into a securitization program through the CMHC, right? That hasn't happened yet, right? And that's what they want, because that creates the most efficient cost of capital, which we'll talk about. It also creates less risk for the bank, right? Like this whole country is just built off of how, like, as low risk as possible, right? We are not leaders. We don't innovate, right? When it comes to these things, we are very comfortable and very happy to rest on our laurels, with respect. If it ain't broken, sorry, don't fix it, right?
Makes sense. Yeah.
Or if it ain't fixed, what's the yeah, if it ain't broke, don't fix it. So the way we look at the budget piece is an enablement piece, right? Like, let's be very clear. And again, this is because I've been road showing technically, with multiple media interviews and radio shows and all this stuff. We're not bringing Sharia law, nor is Justin Trudeau bringing Sharia law to Canada, right?
That's what I was going to ask next. Is a lot of people, a lot of comments under news articles and YouTube videos and whatever it is. They're like, Sharia is now coming to Canada. The Muslims will not have to pay any interest. And why do they get all this special treatment? How can I sign up?
Absolutely. Yeah. I even saw one post where it's like, okay, so we're giving interest-free loans to the Muslim community, and in order to make up for that, we're going to double the interest rate for the Christians.
Exactly.
SubhanAllah. I just thought it was funny.
Yeah.
But yeah, so, number one, Sharia law is not being introduced. Why? Because these products are already available, right? They're happening, right? And, if Sharia law was being introduced, then why wasn't Sharia law being introduced when it comes to the halal meat industry, right? Or why wasn't Talmudic law being introduced when the kosher industry, was brought to Canada? Like, it's not, right? These are just rules and regulations of certain faith-based individuals that they want to adhere to. And so what's the current issue with Canadian tax code when it comes to murabaha and musharaka? Let's discuss it. When I buy a property and then I have to resell it, there's two transactions there. Right? And there's actual two pieces of ownership, right? It comes into my ownership, then it goes into your ownership. Well, the tax code says that this is two transactions and there's two changes of ownership, and now you have to pay land transfer tax twice.
Yeah.
Right?
And that's a lot.
And it's a lot. especially in Toronto, it's double. That's number one. Number two, I bought this house for $500,000, which is the one you wanted. So I bought it on your behalf. And then now I have to sell it to you for $750,000. Well, there's a capital gains of $250,000 there. Even though that's just the long-term profit rate, right? Embedded back into the resale price. So why should I pay tax on that? They'll say, well, that's capital gains. You have to pay tax. In regular financial institutions, interest-based investments, interest-based financing transactions are exempt from sales tax or GST, PST, or HST in BC and Ontario. Our structures don't involve interest. So, okay, you're not using interest, which is tax exempt. You're using profit. Oh, is that revenue? Should you be charged HST now, which gets passed down to the consumer?
Of course.
Which makes it more expensive. So when we were in, the 3 years of R&D with our lawyers, we had to find a structure that avoided those three issues, tax issues. And we did, alhamdulillah.
Wow.
Okay, alhamdulillah. And these are big, big issues. Like without that, we wouldn't have a product today. There's no way I could even sell that with a good conscience or a good heart. It just didn't make sense. So we found a way to do that. When we started to do the products and put them into the marketplace, the lawyers that were dealing with our clients started to call us and say, hey, by the way, there's still some tax issues that we can't avoid, right? And many of them come from the perspective of first-time home buyers tax credits. So there's a land transfer tax credit, there's an HST tax credit, as well as even if you're transferring a mortgage, because there's change of ownership between you and the bank being replaced by us, and we're actually going in as a partner with you, there's actual land transfer tax applicable there. It's much smaller, but there's still additional land transfer tax, and that's a closing cost. So, when you think about all of that in the context of the budget, what we're saying is the Muslim community is at a disadvantage right now. They want to buy homes using these structures, and your tax code is penalizing them. It's making it more expensive for them to enter into home ownership. Can we take a look at this tax code and equalize it, right? Make it fair for everyone. Because the way we look at it right now, it's discriminatory, right? And it is not fair, right, for other faith-based groups that want to enter into a financing transaction in their own way, and now they have to pay more tax. Like, our clients have been paying more tax to the government of Canada than they should be. So for anyone out there that says, you know what, they want a halal mortgage, what we say, ahla wa sahla in Arabic, welcome, but just know that you're going to pay more tax to the government because of this.
That's
and now
difficult.
you're gonna revolt. You're gonna riot, right? So maybe we've created some sympathy out of this,
yes,
right?
Yeah.
Maybe you'll feel bad for us because we have to pay more tax.
People are already upset with Canada's higher tax rates than the U.S., and then now they've increased the capital gains tax. The U.S. is so much lower, and now it's 66.7% here.
Well, that's the inclusion rate, but that's a different topic for
that's
another
a different
day.
topic for sure.
Yeah.
Can there really ever be fully Islamic banks in Canada? Or can MANZIL be considered a bank, or is it getting there? Can we really have that, or that's not something that could happen?
Yeah. So the good thing is if we were to go for a bank license, we could apply and we can go through the whole motion. It takes years and there's so much involved, right? You wouldn't be asking for an Islamic bank license. You would just ask for a bank license.
Yeah.
Right? And then you would work with the regulator, AAOIFI in this case, to say, well, all of our products are just going to be Sharia compliant. And they don't have an issue with that. They don't have an issue with you operating as a bank, right? Licensed. And all of your products are Sharia compliant. As long as you work with them so that they can understand and you put in the right processes and protocols in place. And of course, they are truly Sharia compliant because, even they're aware of halal washing, right? Somebody coming out and saying we're halal even though you actually aren't, right? How do you make yourself halal? Because they don't have a regulatory framework around this. And so this, again, part of the budget is consumer protection, right? To ensure that another UM Financial doesn't happen, right? and putting in a regulatory framework to say, well, if you do want to create products and services that are Sharia compliant, you know, it has to be under this kind of box that we've created. And you have to have the governance pieces in place. You have to have the oversight in place. You have to have the consumer protection mechanisms in place. And these are all good things. Doesn't mean that these banks are being shoved down their throat. Now you have to offer a Sharia compliant product for this community. No, it's up to them. But hey, if you want to, this is how you can do it. And I think that's a good thing for Canada. That's a new industry for Canada, right? This is new business for all of the law firms and consulting firms and audit firms on Bay Street, right? This is great. In 2003, this is exactly what the UK did, right? They created a framework, right, under the FCA, the Federal, the Financial Conduct Authority, which is equivalent to our OIFI, and said, hey, if you want to be an Islamic bank, this is how you do it. And if you're a regular bank and want to open up an Islamic subsidiary or a window, a window, this is how you do it. And we're okay. Ahla wa sahla. Come and do it. No problem.
That's awesome. Yeah, I mean, I see the UK as several years ahead of Canada, even the US.
20 years ahead, actually. They started in 2003.
Yeah.
21 years now.
They're quite a bit ahead.
Even the US.
Yeah.
Right? And you'll hear me, if you've seen me in radio or even in newspapers recently, I'm saying it loud and clear. Like, Canada is the last G7 country to adopt or create any sort of Islamic banking framework. Why? We have 2 million Muslims in Canada, growing to 3 million by 2030. We're the fastest growing religious base and fastest growing demographic. Yet Australia, that has 1/5 the amount of Muslims, 400,000, has created an Islamic banking framework, and we haven't. Why? It's good business. It's inclusionary, right? Right now, you know, even if anyone wants to read a 300-page thesis, go ahead. But my doctorate.
I saw that on LinkedIn. It sounded interesting. I do want to read it.
You know, my study was focused on Canadian Muslims. We looked at the social and religious determinants of adopting Islamic banking products amongst Canadian Muslim consumers. And there's this concept of financial exclusion, right? We always hear about financial inclusion, but there's actually a financial exclusion issue here in Canada, particularly amongst Canadian Muslims. And what does that mean? I'm here as a Canadian Muslim. There's only regular banks for me, and I'm only going to participate in the minimum amount of products that I need to operate my life in Canada. Why? Because I work for a company and payroll has to be deposited into a checkings account. I have to have one credit card to build up my credit score because nobody will rent to me without a credit score. Nobody will allow me to buy a car without a credit score. I can't even get a cell phone without a credit score, right? And that's it. So what am I excluding myself from? I'm excluding myself from all the other services, right? I'm excluding myself from actually participating in the fabric of Canadian society, right?
Yes.
I am not integrating myself as much as I would like to, because why? There is a system that does not agree with my belief system. And that's not good, right? We want, as Muslims, we want to integrate into society. We want to create wealth. We want to create intergenerational wealth. We want to create social influence from that wealth. These are all things that are positive outcomes by creating a financial system that enables, right, Muslims to shift from financial exclusion to financial inclusion.
That makes sense. I mean, that concept is very important. I know that many Muslims as well, they actually don't want to even have credit cards.
They don't.
It's just something.
But they're forced to.
They're forced to have it, and even myself included, I kind of don't really like the concept of credit cards. It's just the fact that they exist, and a lot of people get into a lot of consumer debt because of that. It's just easy to spend, and they get $30,000, $50,000, $80,000 credit limits, and they just rack it up slowly but surely. But instead, if we can come out of that credit cards, but still be able to build credit using prepaid credit cards or with other financing means, halal financing means, where you're still building good credit and you're paying everything off, and but you're not. It basically disables you from getting into debt just from bad practices. You just can't get into bad debt. that would be a really good direction as well. So is there something that could build towards something like that? I know on your website as well, I had seen Coho credit card
Yes.
product.
So that's a prepaid card, right?
Yeah.
And they have a credit building feature, which is what we loved, and that's why we partnered with them. You may have also seen on our website like a save and spend webpage,
Yeah.
which is equivalent to a savings, which is savings accounts for save, and spending account is a checkings account. It's in waitlist mode because we're currently in talks with some banks around creating a Sharia compliant halal checkings and savings accounts for our community, right? And they would be the back office, we would be kind of in the front, wrapped around like a debit MasterCard.
Interesting.
Right?
Yeah.
And even from a savings perspective, you would actually get a profit, right? Which would come from, financing activities through MANZIL. That's how it's done, right? In the UK, they call it a PLS, a profit and loss sharing account.
Yeah.
Right? So we're working on that. And again, the conversations become difficult when we can't show them the support that we're getting, right? So I would encourage everyone, right? Like, okay, even if you're not a MANZIL client, go on our website, manzil.ca, and just get on the wait list, right? And say like, this is something that I want. This is something that I'm willing to participate in. Even if we launch and you don't get it, it doesn't matter, right? At least show the interest, show the indication that this is something that is of true value to you. And inshallah, once we launch with it, you can get it. It's up to you, and it'll be the first, because everything that MANZIL has done has been a first, right? It's precedent setting, never been done before. Alhamdulillah, the whole team. It's a whole team approach, and we all thank Allah Subhanahu wa Taala for allowing us to do this, right, for the community.
MashaAllah, that's awesome, and can't wait for a lot of those things to come into fruition. But a lot of people use, for example, get into some investment, vehicles where a lot of people are, for example, using Wealthsimple, and they have a halal portfolio, and there's other products like that out there. They want to invest in the stock market. They want to invest in certain, areas where they can get a return. Is that something you've looked into, or even crypto? Crypto is a huge thing, and it's complicated. I know it's a little bit different, and there's crypto exchanges and all of that. But has there been any discussion or any looking into for those directions? Yeah,
so MANZIL Invest current platform V1 version 1 is kind of like the way Wealthsimple started out, right? Early days of Wealthsimple, they had just structured portfolios that you could invest in, mutual funds only or funds only, and it was wrapped around a service fee. And then they moved into direct investing, crypto, and the like. This is something that we would love to do, right? We have similar needs as a Muslim community. Even we have clients that have a MANZIL account. They'll have their direct investing account because they want to hold certain stocks, and maybe they're holding crypto, right? We can't accommodate the other two, but we can definitely accommodate the first, right? So if you want to participate from a fund level perspective, that's where MANZIL Invest comes into play. It's a goals based product. So you can create goals, you can create sub accounts, and it's fully digital, right? And again, the more support we get from the community, the faster we can move on all of the other initiatives, right? We're only moving as fast as the support comes to us, because there's so much that we want to do. There's so much that we can do, right? Like, we have the expertise in place. We have the potential partners that we can reach out to say, hey, we'd like to do this. And don't forget, these things take a long time, right? Like, when you're partnering with major institutions in Canada, this is not a week's process. This is multiple months, several months, sometimes even years before you can get these things in place. So even with us as a Muslim community, if we're thinking, oh yeah, well, they'll do it next year. Well, maybe, but with your support, we could, right? And there's nothing stopping you from supporting us, right? Like, we have all of the major third-party service providers working with us on this platform, on the solution. Same service providers that banks and large financial institutions would be partnering with, right? So we're at that level. And so, from a investment protection perspective, from a security perspective, from a governance perspective, all of those things in place to establish trust and credibility, not only in our organization, but in our products, right? And so the more that we can get the community support on this, the faster it is to have these conversations, and the easier it is to actually enact these conversations and to execute on them.
Yeah, that's definitely true, and I think Canadian Muslims are slowly waking up to that, and the support, just the rallying, will be very important. If you can share, what are some of maybe the top exciting new things that might be coming soon to MANZIL? Is there something that you can share with us here today?
Yeah. So one thing, we're working on a bunch of things. First of all, right? So one thing that we mentioned or we talked about earlier is like just expanded funding for our mortgage program. So you may not look at that as exciting, but I look at it as exciting because that just means we can help more people.
No, that definitely is.
And part and parcel to that is actually expanding the halal mortgage program across the country, right? So as I mentioned, we're in Ontario and Alberta right now. We're actually licensed in BC. We're licensed in Saskatchewan, Quebec, and New Brunswick. So just a couple of the East Coast provinces that we're still working on, and I think Manitoba, and then we're good, right? But can we operate? How can we operationalize? Again, more support into the MANZIL Mortgage Fund, right? So that's an exciting thing that we're working on. The MANZIL Wills platform, we just relaunched that. So we haven't done any marketing around it just because we're kind of in like stealth mode. It's launched, it's available, so clients are already using it. And maybe this is a way to kind of get that out there. It's Ontario-based only, but the reason why we did kind of a full rebrand, a full reintegration into our tech stack is to allow for the expansion of that product across the country, right? So something exciting that we're working on is the expansion of that product. We went from wills to wills and powers of attorneys. So this is a new, let's call it an expansion of the product. So we've introduced power of attorneys for health and powers of attorneys for finance, right? Fully Sharia compliant, all in Ontario now. And now we're going to, move to other markets where the Muslim population is large, and then eventually, of course, end up across the country. So that's very, very exciting. And then, as I had mentioned, we're in talks with financial institutions with respect to creating like a halal checkings and savings accounts program for our community. Again, I would like to think these are all 2024 initiatives that we'd like to, not complete, but expand on and inshallah introduce. But you never know, right? Like there's lots of things that we've mentioned to people that, like in 2022, this will get done this year. And then it goes into 2023, it goes into 2024. Yeah. And it's not really a knock on us. It's just a matter of how the conversations go. It's priorities on both ends. We're definitely the fast ones in the relationship, especially when you're dealing with large institutions that have multiple layers of bureaucracy and multiple departments that need to participate in these types of initiatives. But alhamdulillah, Allah has given us the sabr to withstand that.
Yeah, I mean, as a much smaller and nimble organization, you can easily do things a lot faster than these big banks. But it would be really exciting for a day where I can set up a payroll deposit with an Islamic bank, like with MANZIL, and you tell your employer or whatever that this is my account, or even like a business account if that happens in the future.
Business accounts is definitely part and parcel. Like there's so many Muslim business owners, as you know, right? Yeah. So many charities. There's so many not-for-profit organizations, and all of them are going to need a home, right? For their savings accounts, for their checkings accounts, for their investments, right? And we want to be that one-stop shop, inshallah.
Inshallah, for sure. I wanted to ask you about entrepreneurship. So, and just getting into business, and should more Muslims really be getting into financial services businesses, lending, investment management, or even venture capital and insurance, which is also there's a whole Islamic model towards that.
Yeah. It's a good question because, I got into the financial services industry in 2007, and I felt like I was the only one, right? Yeah. Now I kind of have a network of individuals, especially in the investment advisory space, like, people at RBC or CIBC, TD, but it's still very, very few, right? And I understand why. A lot of the Muslim community comes out and says, well, I don't want my income, right, to be haram. Yeah. Or based from impermissible activities. Totally understandable. And I would be lying if I said to myself that I wasn't, right? However, that knowledge, that experience really got me to where I am today, right? Because I needed to understand the system. And I didn't know that MANZIL was going to be my ultimate path, right? But of course, I was making dua and making lots of prayer that may Allah take this knowledge that I've gained so that I can, for the community to gain, right? Instead. And so that ended up becoming the path, alhamdulillah. And so, if we had more and more Muslims in these positions, maybe it would have been easier, right? Maybe we would have had Islamic banking set up already. Maybe we'd have a lot more funds and a lot more, startups in the space tackling these issues, right? Because the way I look at it is, I'm just a lone wolf.
Yes.
I'm happy, right, to take the burden and shoulder the responsibility for the community and work on behalf of the community to make these things happen. Alhamdulillah, Allah has blessed me to do that, but it takes time. And with more people, it may have taken less time, is all I'm saying, right?
Yeah.
Like if we were on a united front, if there was people in certain positions at these financial institutions in all departments, whether it be insurance, advisory, tax, investments, wealth management, all of them. Like there is a need, right? Because they don't have that perspective. You know what the banks tell me? They say, well, why would we do this? Because the Muslims are already our clients. So what, we're going to create another product to move them from one hand to the other? And then I say, okay, I understand that sentiment. But the problem is once somebody creates something and they start leaving, it's too late for you.
Yeah.
Right? And that's fine, right? Maybe they're okay not tapping into 2 million Canadians, growing to 3 million. Maybe they're okay with that. But really, at the end of the day, I don't think that's not a forward-looking individual. That's not a forward way of thinking, right? And so the more entrepreneurs we have, the more people that voice their concerns about not wanting to take on a interest-based savings account or a GIC or investing in bonds, right?
Exactly.
Or I want my investments to be completed in a Sharia compliant way. And you know what? The bank can't service that for me. I'm going to go to MANZIL. They're going to notice that. They know where the money goes once it leaves the bank because it says there's a transfer out going from RBC to MANZIL, transfer out from TD to MANZIL, transfer out from Wealthsimple to MANZIL, whether it be on the investments front or even on the mortgage front. They know. And the more that happens, they'll start to see that trend line. And then they'll start to wake up and they'll say, oh, we should do something about it, but it's too late.
Would they try to buy out a MANZIL-like entity?
I think that their first move would be some sort of partnership to maybe fund these products, maybe take an equity position in MANZIL. If that was the case, obviously we would have to do a lot of thinking and a lot of shura on that, because what is their end goal? Because based on my experience with other startups in the community, banks buy things to shelve them, right? And I'm not here to be bought and shelved, right?
Yeah.
I'm here to be enabled. I'm here to maintain autonomy. I'm here to represent the Muslim community and be a voice for the Muslim community, because at the end of the day, with all of this talk around Islamophobia, there is Islamophobia in finance.
Of course.
It's plain and simple, right? There is Islamophobia in finance. We are financially excluding ourselves from participating in the system, and our wealth is not being enabled, right? Mm-hmm. When you think about like the typical Muslim, let's say you had $100,000 in your savings account, checkings account, 0% interest, right? You're losing money based on inflation, as high as 7% like 2 years ago. And now you have to pay 2.5% zakah.
Yeah.
Right? That money was held for at least 12 months. You have to pay 2.5% zakah. So, okay, real dollars is 97,500, but what's the real value based on inflation? 95,000? 90,000? That money's going to become worthless in 5 to 10 years, right? So why not have a system that allows that money to participate, to grow the economy, to participate in the GDP, open up businesses with, right? Isn't that what we want?
That's right.
That's the impact of a circular Islamic financial system. That's what we're trying to create here.
And that kind of leads me into what I've also thought about quite a bit, and kind of the next question really is about, are there any options for entrepreneurs, Muslim entrepreneurs, let's say in tech startups or other startups, in a Sharia compliant way for startups to raise, angel or VC investments under a halal structure, and then, go out to our own community and start raising some capital because they want to work on an AI startup, for example.
Yeah.
There's a lot of talent out there. I work in tech, and there's a lot of other Muslims as well that are graduating every year from universities, and they have a lot of training, and they have a lot of talent, but there isn't really a structured way for us to get into entrepreneurship and then attract capital, and all of the investments have to be Sharia compliant. And I've worked with many different tech startups, and when I talk to CEOs, and they'd kind of tell me about how their investment structures work. They do a lot of debt raising.
Yeah.
They do a lot of raising with even VCs and angel investors, where they put in, let's say, even $100,000. And it's not just they get shares for that amount, amount of money, but every year that they're invested, they're also earning interest on that. And so there's a lot of complications around, if I go to an angel investor or VC and be like, I'm a Muslim entrepreneur, I don't really have to say that, but I want investment, but I can't pay you interest back. They're like, just get out of here. And also like that for a lot of investors. So what is there solutions, or is there something that needs to be done out there for that?
So I'll give you our example, right? And we had talked about this early in the episode, is that, we did 3 raises, all equity based, all priced, right? Why? Because that's the most Sharia compliant way of doing it, right? We didn't take on any debt, alhamdulillah. We never took on any convertible notes. Although there's a way to make a Sharia compliant convertible note, not necessarily a Sharia compliant debt structure, especially if you're like a software based company, like there's no assets that could be bought and then resold to introduce some sort of murabaha agreement or musharaka agreement. We've structured safe agreements, like simple agreements for future equity, right? That are Sharia compliant. So, I would say, like, most put simply, those would be kind of the ways that you should move forward with your startup, is just on an equity basis, like give up equity, take money for it, and then grow your business that way. Until it becomes a little bit more familiar and mainstream with VCs and angels that there's other ways to do it. Now, listen, I'll tell you this right now. If you have a startup that everybody wants, they will do whatever you want as a founder.
That's
if
true.
you say, hey, this has to be Sharia compliant, whether it be debt or equity or something in between, they'll do it, right? But if you're, in a position of weakness and you're trying to attract money from angels, in particular, angels are flexible.
Yeah.
VCs are less flexible. Institutions are like, their terms or get out, right? And it all depends on where you are at with your startup. How big is it? How hot is it? How and what's the FOMO around it, right?
Makes sense. What is the kind of appetite in terms of what you've seen in Canada for investments, especially among Muslims, versus you said you've been traveling as well to Dubai and other places, and Riyadh and Saudi Arabia, and what is their appetite in terms of investing in new ideas, and what you're doing, as well as also other kinds of startups and initiatives?
So in Canada today, non-existent. I would say that there's virtually a zero VC market anymore. Canadian VCs are very, very risk averse, which is the antithesis of a VC. Even when money was flowing, a lot of them wanted a Series A style company where they would write you a check based on a seed valuation.
Yeah.
Right? So the metrics that they were looking at had to be much more advanced than a typical startup, at the stage, right? And that's how they reduce the risk of their investment. But you're a VC. You're supposed to be highest risk capital, right? So the mentality of Canadian VCs is not good, right? Like I've dealt with them. A lot of them don't understand, something new. They like to stay within, their lane. Most of them don't even have their own thesis around like what they want to invest in. A lot of it is FOMO based. Oh, okay, you have a term sheet. Okay, I'm in. Like they won't lead. They won't be first check in. A lot of their funds, like up to 60% of their funds are built around institutions like BDC, right?
Yeah.
So when you think about that, like if you don't have BDC involved via fund or directly, they're not coming in.
Makes sense.
Right?
Yeah.
Or somebody has to like write you a big check, or you have like some sort of massive partnership agreement already in place, and then they'll come. They'll be like, oh, okay, this is now fully de-risked. I'm like, but why? You shouldn't be looking to de-risking, right? Like you're high risk capital, right?
Yeah.
Why would, and that becomes expensive to me, right? A lot of founders don't understand finance either, right?
That's right.
A lot of them, come out of school, software engineers or whatever. They have this idea, maybe they did consulting. They don't understand, right, the risk-reward relationship of capital. And Canadian VCs really, really like to take advantage of that, right? They cut deals where you think you're like, okay, yeah, like this is a good deal, but long-term, it's not, right? There's so many examples in the marketplace that I can give you with. US, however, is a little bit different. They are aggressive. They'll tell you no on the spot or very soon. Canadian VCs won't tell you no. They just kind of keep you in limbo, keep you hanging. Hey, we like this. Why don't you come back with more traction? Okay, how much more traction? We want to see this. Okay, and then you do it, and they say, oh, give us more traction. We want to see more and more and more. And they don't do anything. Like it's just paralysis by analysis for them and their investment research team, right? And they're not forward thinking, right? They don't look forward. They don't look at like, okay, yes, this is new territory, but we have global if there's no real local example for them, they don't know what to do, right? Doesn't matter if there's global examples, right? And Canada's such a small market.
It is.
Like it's less than 3% of the global GDP. It's such a small market. And that's why you see a lot of people going into the States. You 10x immediately, or you go into the Middle East, right? Where they've now caught up, right? Like 3, 4, 5 years ago, you would go to family offices or VCs in the Middle East. They were unsophisticated. They would write checks based on relationships. Now, completely different game, right? I would say they're much more advanced than Canada and even Europe. On par with potentially the US. And a lot of US money is flowing into GCC-based funds. There are a lot of US-based VC funds or fund managers in the GCC now operating to basically look at kind of local opportunities. There's a massive arbitrage there, right? Not to say that it's not relationship. There's still relationship involved, right? But the way they think about things is much more aligned with kind of the U.S. mentality of investing and, wanting to be lead and aggressive. If it's a no, it's a no. They'll tell you right on the spot, right? You'll never get a no from a Canadian VC, ever. You also won't get a yes.
Canadians are nice.
Too nice.
Too nice.
Too nice, right?
Too nice.
They think they're hurting our feelings, but they're not. They're making it worse.
That's right. I think we need in Canada a lot of Muslim mentors as well, that are business leaders and have kind of gone through some of that growing pain, like you did with setting up MANZIL and kind of being first in the industry, and also a lot of the experience around fundraising and setting up a business. And you also have a finance background, and and now with all of this MANZIL, everything is about money and managing money and investing. And like you said, a lot of tech startups, software engineers just come out of computer science school or engineering school, and they don't know anything about finance. And that was me as well. I don't know that much, and I've worked all my life in tech and software development. So it would be awesome to have a network of mentors that are available where you can reach out and kind of have that connection and make the right deals. Like you said, these VCs will take advantage, and I think that would be quite beneficial to set up something like that. Yeah,
no, listen, not just networking from a business community, entrepreneurship community. It's there, right? It's not fully in one place if it needs to be, right? But the Muslim community is very generous with our time. We're always happy to mentor. I mentor a lot of new startups, existing startups, just on the side because they look at me. And I'm happy to share. I also have a teaching background, right? So it's just part and parcel of who I am. But more importantly, you had mentioned this, is we don't have structured funds, right? That can be deployed back into the Muslim community, especially from an entrepreneur perspective, right? Where is, the Muslim-led VC funds, right? non-existent. And there's lots of Muslims that have made money, right? Whether it be in the startup or kind of the private business community. And there's a lot of high net worth individuals. So I would love to see somebody take that on. I certainly can't at this point. I could later on. It's one of the things that I want to build out under the MANZIL brand is kind of have a Muslim VC fund where we support Muslims. And you know, it's not any different from a regular VC fund. You know, obviously there's due diligence, there's risk assessment, there's everything. But we're gonna act like VCs. We're not gonna act like pension fund managers. You know, that are risk averse, right? And there's so many Muslim businesses that we can help grow exponentially and expand, right? Like the expertise we have in terms of a knowledge base within the Muslim community is immense. It's enormous, and we're not leveraging it to our community's benefit.
Yeah, exactly. Like you said, the leveraging, I think, is not going both ways. We have a lot of talent, and a lot of people are working jobs, but they have the ability and talent they can get into entrepreneurship and, you know, build something that's amazing, but they just don't have the support structure. They don't really see themselves being able to kind of come out and have that investment network around them, and they can, you know, tap into those resources. But at the same time, I also see some, like you said, high net worth Muslims that have gained their wealth through real estate, through business, or whatever it is, and they'll spend their entire career just on their business, and they don't really ever look at other investments. They might have a couple of houses, 2, 3, 5 houses, and they have their business, and they're happy with that, and that's it. And they go old and they pass that down to their children, but there's no investment happening. They don't have any avenues or opportunities to invest in some other Canadian companies and startups by other Muslims, let's say, and grow their wealth that way as well, and have a more diversified investment portfolio. And they just, you know, and they're kind of just sitting on their own money and nothing's happening. So I'll see that sometime in the community. There's like a lot of wealthy people, and
they're just paying lots of zakat, bro.
Lots of zakat. I'm like, it would be amazing to have some kind of way where there's a lot of Muslim entrepreneurs or wannabe entrepreneurs, and these guys have capital, and how someone should bring the two together.
Yeah, absolutely. You can create venture studios, right? Like all of these ideas have been done, just not for us.
Yeah.
Right? They're out there. So we don't have to reinvent the wheel here. Like there's many examples, tried and tested, you know, structures where, you know, you can matchmake entrepreneurs with investors. You can create your own, you know, ventures through a fund and hire the right people to lead that, right? Like there's so many of these examples out there, but it's just not happening for us. It's not happening in a structured way. It's not happening in a professional way. And this is a huge opportunity, I believe, that we can tap into.
Definitely. So, inshallah, just to wrap up, there's a couple of questions I had from some people when I said I'm going to be speaking with Dr. Sawwaf. And they're like, oh, awesome. Can you ask this? Can you ask that? I'm like, all right, I'll take a couple of questions.
Why not?
So one was, do you have any products or do you offer financing for vehicles?
So the simple answer is no right now. It's actually funny, our path when it comes to halal financing for vehicles, because we've engaged with multiple partners, and every partner that we've engaged with has been bought out or merged with somebody else. And so then there was change management, and it didn't become a priority anymore. Can it be done? Yes. Again, would we like to stabilize our current offering before we move into new products? Yes. So what does that mean? Okay, we need more community support, right? So that we can get more money out the door for mortgages. We want more people on the MANZIL Invest platform. We also want more people, getting their halal wills done, right? Like that's our current offering. That's what we want done. And the more support we get, the easier it is for us to say, well, you know what? Operations there is done. Like it's now a well-oiled machine. How can we now shift our efforts to halal financing for vehicles, right? And all it takes is finding an opportunity with a partner to say, you guys do this. There's an opportunity within the Muslim community. Do you want to partner us with? And we have the clientele already, right? Yeah. Or we could open up another fund, right? We'll open up a fund that's specific to vehicle financing, have the Muslim community invest in it, and then we will then operationalize that and execute on it. So it can be done. It just takes time. And inshallah, it'll happen.
For sure, inshallah, because I think vehicles, also the cost of entry is a lot lower than obviously homes.
Exactly. It's way easier, right? And people are buying them in cash when they shouldn't be, right? Like cash flow has become a real issue within our community, right?
That's right, yeah. Or they'll get into leases because the financing is, you can't do financing with all of the...
Or they wait for the 0% financing,
which is basically promo. Non-existent now. It's only like some pickup trucks.
Yeah, exactly. You're not getting... They want everyone to get into construction.
I did see a Mitsubishi RVR, which is not a car to buy. But basically, if you want to get a Toyota or a BMW or Mercedes, you just can't finance it. It's like 8.5% rates or whatever it is. And then so people just do lease and that's it. But they would rather have bought the car, especially if they're buying like a family vehicle and they want to keep that for a long time, like a Toyota or something. So that would be an awesome. So more into the car thing, how about in home and auto insurance, like a Takaful program? Is that something you've considered?
Yeah. Insurance is very difficult to do in Canada to get your own insurance business up and running. Like I think I saw like maybe like $20 million of capital and licensing and all these things. Can we partner with somebody on this stuff? Absolutely. But we need an open-minded partner, a willing partner to kind of go through the whole, bureaucracy and, operationalizing a new product specific to our community. Because, Takaful, it's out there. You know what's funny? Manulife and Sun Life are operating in Malaysia right now via, they've acquired companies. And yet I don't understand why they can't find a way to bring those products here. Like, you have access to them.
Yeah.
You have a community that you can sell it to. So why not, right?
I guess there's no incentive. A lot of people are with their TD insurance or whatever. And
maybe, but
they don't care.
I think you can create, listen, innovation is good because it creates competition, right? And if you can come and tap into an opportunity that nobody's tapping into, you could create a monopoly around that. So from our perspective, I would say it's not just a lower priority, but we just know how hard it is. And we actually haven't had any real discussions or substantive discussions around it. So if there's anybody out there listening to this that wants to work with us on that, we'd be happy to.
Somebody take on the challenge.
Yeah, exactly. So many, right? So many challenges.
Yeah.
We can't do them all.
For sure.
At least not all at once.
We need more players.
Yeah.
I guess one more question here was, do you think sukuk investment, Islamic bonds, is viable in the Canadian market?
Absolutely. It just depends on the underlying asset. And the way I look at it is even our MANZIL mortgage fund, we could turn that into a sukuk.
I see.
Right? Because the underlying assets are Sharia compliant. Majority of them are musharaka based. So you take that, you package it, wrap it into a sukuk, sell it on to the secondary market, and then it's fine, right? Even when we were kind of pushing and banging the drum of Islamic banking in Canada, a lot of countries that introduce Islamic banking start with a sukuk, like a sovereign sukuk or like an infrastructure-based sukuk, or with a large company to send a signal to the market, right? Sukuks are always oversubscribed. There's not enough sukuks globally to fulfill the demand of capital that wants to flow into sukuk structures, right? So that's a good thing. There's demand for sukuks. The problem is you can't build a sukuk for less than 200 million, 300 million, 500 million dollars. Otherwise, like, there's just so much costs involved to get a sukuk up and running that if you don't have the minimum, like, let's call it target, nobody's even going to engage you with it, right? So can Canada come out with a sukuk? Absolutely. Not the government of Canada. Can there one come out of Canada? For sure. Will MANZIL be the first? Inshallah. Right? But yeah, definitely it's something that can be done.
That's good, mashallah. It's been a very interesting conversation. I'd love to have that again. Anything else you'd like to share with us before?
No, listen, I'll plug myself. Anyone that's interested, menzil.ca. As I mentioned, we have a few products that are being adopted by Muslims every day, alhamdulillah. And the more support we get, the more we can do for you, right? Like, this is not a selfish ask, and it's not, for us only. Like, this is for community by community. So let us join hands, let us unite, and let's create a system outside of the system, right? We know that system doesn't work for us. There is a viable solution in front of you. And let's start to make that shift, right? Because if we can't speak, if nobody's listening to us, at least we can speak with our dollars.
Yeah.
Right? And that's where the influence can be created later on, inshallah.
Inshallah, for sure. So, Jazakallah khairan, you guys heard it here first. So please go to MANZIL's website and at least sign up for their waiting list. Sign up for whatever you can, and try to support us every way as possible. And inshallah, hope everything that you have set as goals for 2024 comes to fruition.
Inshallah, keep us in your prayers.
Inshallah, and I would love to talk to you again as more things develop. It'll be interesting as we'll see how the year develops. We talked about a lot of things that are coming for 2024. Going into 2025, so inshallah it'll be interesting.
Inshallah. Yeah. Thanks for having me on the show.
Jazakallah khair.
Wa iyyak.